Good morning, good morning, good morning. All right, lots and lots and lots have happened. Holy moly. I haven't made a new video since last. I think it was right here where we said the market is bullish, stay bullish. The Fed it'll pop here on the Fed because it hasn't changed the wave. It hasn't changed the bullish bias still. Nothing has changed. But I'm sure people are freaking out and looking for more info. There's a lot going on around here, so we're gonna try to blitz through it, get it all out. So all in all, the market is bullish. I expect to see a rally for the next at least 2 months. The only difference between a rally from now until somewhere between March and May, a violent one to the upside, is that versus a very choppy rally into March and May, and then a correction from, like, let's say SPY 500, 520 back down to somewhere in this area, 440 to 480. So it'll go up, and then retest the top of that. I don't think that happens, but I think that's the only other wave pattern that's possible. What I think actually happens is the S&P goes up to 500 to 530, like we're talking like top, like overextension, 500 to 530 in the next 4 months before June, so sometime in May. And from there, we get a correction down to about 400 on the SPY. So about a 20% correction. And it will happen fast. It'll be one of, in my opinion, as of right now, it'll be one of the worst corrections in stock market history outside of 1987. In terms of velocity, in terms of the VIX spike, etc. It'll be worse than February 2018. So that's what I see. But as of right now, we are bullish. So the things that we're looking at right now, okay? We had at a top for 2 months, people were talking about a crash, correction. Can this continue? Overvaluations, Fed's going to raise rates. Everyone was so pessimistic here. That's not what you see at a top. You will never see that at a major market top, ever. It's a rule. You will never see that. Okay, so that's one. Two, well, we're not going to go in 1, 2, 3s here. Okay, so that's the first thing. Next thing is, this was the most obvious trend break in the history of trend breaks. Okay, everyone on social media was talking about this. CNBC, Twitter, StockTwits, Reddit, everywhere, just everywhere. TradingView, everywhere was talking about this, and it broke. Okay. But if everyone's talking about it, is it a true trend break? Okay, trends don't behave like that. Psychology doesn't behave like that. That's not how psychology works. Okay, now there's also a huge algo print here. This line here, between here and here. This went back from July. There was an algo print all the way in July and September. I thought what this was here, where we dropped here, we had up, and we dropped, and we kind of double bottomed here. What I thought this compared to this was, and then we rally gigantic, and we keep going, we get that everything rally, is what this is compared to this, right? So I thought this was done, but we needed one more. So this is compared to this. This is what's compared to this. You can, how I see it is, I see it as wave 1, wave 2, wave 1 of 3, wave 2 of 3, wave 3 of 3, wave 4 of 3, wave 5 of 3, major wave 4 breaks the low of 4 of 3. And then you get major wave 5 coming. I don't know how long major wave 5 lasts or what it looks like. All I know is there is a lot of bullish momentum in the market, a lot, which is why I'm putting it about 510, 530 going into May. If it's going to be, and usually wave 5s last about, when you have a big long wave 3, it usually lasts about the time frame of wave 1, which was about 2.5 months from here to here. And then the top of wave 1, this had a 6.5% correction. This was the first time I shorted the market too. So if that's how it plays out, or maybe this was wave 1, wave 2, whatever you want to call it, But this looks like a wave 4 of 3, 5 of 3, and a major wave 4, where it broke the bottom of this and rebounded. Okay, this overextension past the 200-day moving average is when you crash from all-time highs through the 200-day moving average, it is very, very, very common to bounce off of it. The fact that we gapped below it straight down without any real chop into it and things like that mean it was very, very highly likely that this bounces right back above it. And we got it. We made this line here at the start of the day that we bounce into this traffic right here into a lot of resistance, and then we retest the 200-day moving average. I don't know if that happens. This is one possible wave. I think that this is worst case scenario. If the market drops below this line, 443.78, then you'd get nervous and the next leg down would go to 400. I don't see that in the wave. We would drop down to about here. There's a gap. A VIX swell happens here where the VIX goes up and the market goes up. It's a very unique environment where it generally means, just to keep it simple, that the market revisits this area. I don't think it happens here. I think this will happen later in the year, in the summer, or in 2023, but it will revisit that again. I expected a gap up today. We got it. Google gapped up, AMD beat, Google beat, and then a short-term top. So now we're at 455. We're literally right at the 100-day moving average, right above the 20-day middle Bollinger, and right at resistance. So you'd expect to see some sort of a kickback, right? Does it have to happen? No. The way we grinded yesterday, we did a lot of chop. Spiked into it, rejected, into it, rejected, into it. It was a lot of grindy chop, which leads me to believe we might not have to kick back. It may have eaten up the resistance intraday. We will find out. There's the bell. We will find out. Let's see. We gapped up pretty high. Probably going to retest this, fill the gap. We're also at a MACD level on the daily. Okay, crossed in a straight line. So this is not a healthy looking DMI print with this kind of setup. So you're looking for some sort of a kickback here. Yeah, I can see this coming down. So it is what it is, but the story does not change. We broke this. The biggest thing about it is that we were expecting an algo print. There was an algo that happened in July here and here, and also in September right here. And it created basically a line, a magnet it creates. And there you go. Crashed into the magnet. We were expecting the Fed to sell off violently to retest the broken downtrend here. We gapped up. It looks better on the SPY, not on the futures. It gaps up, it breaks it, and then it retests it. And we were looking for a Thursday or Friday for an algo print in the VIX, and we got it. We got it right there at the 434 area in the middle of the day, and instantly explodes. So you look at the hourly MACD, goes above it, fails violently, stays below it, stays below it, stays below it, and then boom, 12 o'clock right here. As soon as it happens, and then you get your first positive hourly MACD print. So when you get these algo triggers, you don't know if it's positive or negative, but it was happening right at a spot where it needs to happen for the market to be bullish and to maintain its bullish wave. And it happened exactly when it needed to. So that's a very good timing for it. It's kind of like if it has to happen and it does happen, that's a good probability. It increases the probability of it. So up, down, if it comes down to the zero line, no big deal, right? But people would be freaking out. Breaking the uptrend right here. So this would go down to the zero line. Don't know if it does. Don't know how this plays out. I don't care about intra-trend moves like this. I care about the big moves. Let's see. People are talking about a massive Great Depression like collapse. No, that's not happening here. I think in a couple of years, as you know, that's not happening here. You had people buying 70 on the VIX for February and March. Not happening. You do not get 2 months of pessimism. Stocks are also wiped out. Stocks got wiped out 80, 90% as the market went up 30% this year. Ridiculous. That's not what you should be seeing. You should be seeing stocks soaring. Everyone's super euphoric. No one's even talking about a crash. That's how crashes happen. That's how real corrections that change the dynamic of the stock market. These don't change the dynamic of the stock market, right? These do. These do. Okay, we're not there yet. So crash below the 200, it overextended, and it bounced beautifully. I expect a very violent rally here coming into February, March. Just need to get through this chop. Okay, let's see what we got. I mean, that's beautiful. If you want to retest that 444, you're talking like worst case. I don't see this really going further. And that's your line in the sand, 434.78. Okay, also, you have things like psychologically wise, okay? You had Kramer pour like, I forgot what it was, gasoline, liquid alcohol, something on like the ARC complex, saying that, and he did it like somewhere right here the other week. And it was such a defining moment. It was so specific, and it felt like a Bill Ackman at the bottom of March 2020 type of moment, you know, where he cried. It was such a very, very specific moment where it looked and felt like a top or bottom for the ARC complex. On S ARC right here, explosive, high volume, big ass doji, classic blow off top type of move. Okay, ARC stock should actually explode. The Teslas, the DraftKings, the Rokus, okay, they have absolutely been wiped out. And there should be an everything rally off of this. So there's that. You have so many stocks bottoming. Tesla retested all-time highs, 50 here. Everything's just looking so clean. Apple broke its... the whole market was dependent on the Apple earnings. Like, in fact, on my stream, we were very specific about it, on how this all mapped out. It broke its trend here. This is a trend from 2020. Broke it, retested it, overextend, hit a bunch of support. There's the 100 day, and there's a 20 weekly. Very, very, very clean. Triple bounce off the 3 trillion market cap. 1, 2, 3. Failed. So if it fails, it needs to come to support. Extended through it, screwed, effed people over if you don't know what you're doing. And there it is. So that means that this activation, beat and raise, this activation, you're going to retest this and you're going to break it. You don't do this and then get this nice little trigger and not break this. This is going to break this. If this is going to break this, Apple's going to 200 in the next 2 to 3 months, right? Apple goes to 200, market's going higher. This is not going to go up to 200 and the market's not going to go higher. So the fact that people are talking about big crash and this and that, it's just not happening. It's just not happening. You have things like the Russell crashing. Okay, I had an alarm right here. The low, 190.94. Low, 188.09. It just broke the low of that print right there. Retest the top of 2020 into a huge volume print. Is it the highest ever? No, the highest in many, many years, even higher than COVID itself, okay? On an open red into the zero line, just touched it into the zero line. That is a spring. That is a huge spring that this is about to literally rip out. And so far, so good. So here we are. So you want to start seeing some activation here within the next few days, within the next week and a half. It's interesting how the Russell topped in the middle of February last year and all the ARCs and everything, and then this is going to bottom in the middle of February. We got about 2 weeks left. Interesting synchronous behavior that the market has been behaving since 2020. A lot of specific things like the middle of December in 2020, the middle of December, it's a few weeks ago. It's very interesting. So what we're looking for, all we're looking for is a rip. We're going to get this rip. It's going to be absolutely epic. The weekly, also look at the volume on the weekly on the SPY, the highest volume since COVID itself. And if that's a bottom, look at that volume, nice green volume off of support, and you get the algo trigger that was magnetized to this level, and now it triggers and you explode off of it. It releases it from this magnet. So now you have 5 months of coiled momentum built into this. Where is it going to go? Non-trending ADX negative move. That's a kickback. And then the real move comes. Weekly goes through the 50 RSI. Retests if this is a positive or negative wave. And it's rejecting the negative wave. So this type of setup, I mean, just the fact that it actually escaped this type of coil means that this was an overextension. So this type of downward momentum is going to get released to the upside. This never should have happened. This blow off bottom here, it's going to get released to the upside. Oh, and the meme stocks, that's the big thing. Meme stocks, you want to hold for sure. This is the type of, this is such an unbelievable perfect position right here. I can't believe it actually got to that gap right here. It actually got there. Look at that. That was worst case scenario, and it actually did it. Double bottom. This is so bullish. I think that these stocks are going to rip out these next 2 months, 3 months. People are super pessimistic, super pessimistic. Everyone's like making fun of the meme stocks. They're literally making fun of the meme stocks on CNBC. They're joking about it. They're talking about how completely wiped out they are. This was a bullish trigger here. This was a bullish trigger for GameStop right here. This is residual. It needs to go support seeking. Sometimes when you get a trigger to go higher, you need to go lower to find support. You got the NFT pop right here. It's the start of the year. You get a yearly candle. You got the lower wick. And now it's time to get, you got the lower wick out of the way. The first big dick candle that starts coming is going to be the activation of this trend here. And it should happen soon. It should happen soon. People freaking out. Look at this. You have that. You crashed into support. You crashed into the middle monthly Bollinger. This is mega bullish. Okay, people are super pessimistic. If this was, people were super euphoric, like right here, and it did that, different story. People are super pessimistic. Memes will never go up. We're gonna hike rates. They're not worth that anymore. They're gonna go down to $10, whatever it is. I honestly, personally, don't think that the Fed hikes rates at all this year. I think they might hike rates once. Quite possibly not hike rates at all. When you see people, the consensus getting really crazy, and like now they're saying 7 hikes. 7 hikes? Are you insane? If you ever watch the stock market consistently for years, you'd understand how important it is to slowly put Fed rate hikes into the market and kind of get the market used to them, and not just kind of flood them with that. It's so unlikely, especially with all this uncertainty going on. We got the midterms in November, that the Fed does this. They're just about to taper. They're not going to hike rates 7 times this year. I honestly don't think they hike rates at all. I really don't think they do. Everyone expects it, and when you have fervorishness with all this, it tends to be the opposite that happens. Just like last year when everyone thought the 10-year would go over 2% and we'd have massive inflation, and we didn't even come close to it all year. It's like the same type of thing. Everyone is like, oh my God, Fed hikes, Fed hikes, Fed hikes. It's most likely not going to happen. If it does, it'll be like 1, maybe 2 at the most. I think the correction will actually be involved with them not hiking rates in March. Or hiking rates once in March, and then in the May meeting they say, since we peaked in inflation, they're gonna hold off for 1 session, something like that, and then that would cause the correction. You're like, okay, we're not hiking rates, great, let's just buy everything now. and then that's like a blow off top type scenario. But again, that all depends on where it is, the psychology, things like that, how everything is set up. For now, we are still bullish. I expect us to rip out. Memes, everything that got obliterated, 70, 80, 90%, ridiculous. This is not the time to sell. It's probably going to go to the dark pool trade. Oh, another thing, we had the highest dark pool buying since COVID bottom this last week. There's so many triggers. There's so many things that have happened that say that we're going to go higher these next couple months and go up higher violently, that you just need to trust it. You need to trust it. This would be a nice short here. Personally, I wouldn't be shorting the market unless you're just protecting, hedging against your positions. But for trading, I would not be shorting anything. I would just be buying calls on dips or at support levels. Not trying to trade the 0.4% drops randomly each day. It's not worth it. It's just not worth it. So this, all in all, done and done. Clean and clean. There it is. Might have a retest of the 200 here. Everyone keeps talking about volatility and things like that. And I think that the value plays like the JP Morgans and the Chevrons, the Raytheons, that those are the stocks that are going to outperform. The stocks that haven't moved much since the COVID bottom. They will outperform once the volatility kicks in this year. And I honestly do think this is going to be one of the scariest corrections in history outside of 87. I really do. This was the face of the correction. This was the market. It was the bear trend. It was the correction showing its face. It was like a kickback. This is the violency of the correction coming. This is just a taste of it. Yeah, it's going to be really, really, really bad. It's going to be really bad. So, not yet. You're expecting all the stocks that dropped, all the stocks that absolutely got obliterated especially these last 2 months. Stocks just dropped 40, 50, 60% from November for no reason. Even before the drop, as we were going up into year end, they were dropping. We've been getting a lot of that. We got that last year. Stocks just dropped the last 2 weeks of the year, even as we went up. Okay, it's just some algo. It's end of year. It's the first month type of window dressing on both sides. People profit taking after the year end. Just hold, buy. This is an opportunity to get really good money here in the next 2 to 3 months. It should look and feel like 2020 when everything was popping like crazy. That's my opinion. That's my opinion, that this will look and feel like 2020 again. I think this crashed into support. Everyone's freaking out. This is where you buy, not sell. This is where you buy, not sell. Or this is where you hold if you're holding, not sell. People freaking out. I didn't think that this would actually get hit. Look at this. The 50 monthly on AMC. Rejected, broke through it, retested it. Support. This is support. People thinking about selling, you're not selling. I mean, may even double bounce here, 1493. You're not selling into this. You're buying into this. You're holding into this. I didn't think the quarterly would get hit. There it is. I did not think this would get hit so soon, but there it is. It happened. The worst of it is over short term. This is going to produce a massive pop, 1563. So again, it could retest that 1493. All these stocks, all the Tilrays and the AMCs, the Blackberries, all the meme stocks, everything, the SPACs, they should all rally here, which is why I think it's going to be a violent uptrend. Also, the sentiment for the market touched this is another important thing. The sentiment here touched equal to the bottom of COVID. Hello? At the top of the market, you don't get that at the top of crashes. You need to understand that. You don't get that. You'll never see that ever. People, like, if this was truly a top and we were going to drop down to, let's say, here, people would have still been happy down here because everything would have been so high up, so blown off, so profitable that even if they lose, they make 1,000% and they lose 300% of it, they're like, eh. But it was completely backwards. I personally think that this wave pattern is like this. Where are we? You can see it. You get the gap down at the start of the option, right? You get this one upside down U. It's one wave pattern, one sine wave. And then you get another gap down at the start. Look how beautiful they did that. Both times, gap down into the algo print, into the algo print. And so you're getting it's like this upside down U. And then you're going to get that. Here. And then you get this huge spring. Retest this broken uptrend. We also have a 90-year trend line that we're about to go into. People aren't looking into this. 5,300 in May. This is another, but there's so many things that we see here. Okay. This is huge. Okay. People probably don't see this. 5,300, 5,250 on S&P. I'm looking for a blow off move into it of some extent. And that's that. All right. I think there's one more thing. Oh, and then there was the glitch trade that everyone was talking about. It happened on the 25th. We had a glitch trade down to 364. There was a huge wick here. We didn't go down there, obviously, but there was a huge wick here on every time frame. And guess what? It's gone. And that's how glitch trades happen on big time frames like this. They'll show and then disappear. It disappeared on the daily, intraday, and then it disappeared on the weekly and the monthly that week, and then the quarterly and the yearly the next week. That's usually what happens. It takes usually more time for the bigger time frames to disappear. And people are like, oh my God, we're going to crash down there. Not at the bottom. You normally, when you get a glitch trade, we were down here. When you get a glitch trade after the drop, and you get the glitch trade there at a potential inflection point, it's not a magnet. You'll eventually get there. We'll eventually get here, but I think we get there either in 22 correction, middle of the year, or 23. I personally think if I had to say 2023. I think we're going to have a shitstorm. I think we're about to have one of these, a megaphone pattern type of pattern. We're going to drop here, 400 this year. We're going to go back up. And then 2023, they actually raise rates. And then the shitstorm starts. 25-30% correction type of thing, and then we go up, and then we get this everything rally, SPACs, GameStop, a million type of nonsense, and then we get like a .com bubble type crypto everything crash in couple of years, 24, 25, 26. But that's something, we're not going to talk about that for now. But when you get a glitch trade down to here at the bottom, it's usually the bottom when you get the glitch trade. It's like it seeped through. It like squeezed through the sponge, so to speak. And it shows itself for a split second, but then disappears. So now people will forget about this and not know what it is. That's exactly what it was. It was that the price action was dropping. It crashed. And then the first residual move, you get the gap down. So down, 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 down. Think about if this is going to go up to here, right? And you drop, you pop up, and then you get the squeeze down from all this momentum. It's a residual move, and it's trying to hold itself. But then you get a little boop. It's like an intraday dark pool trade. It's just a glitch trade. It's just how computers work. It's just how the stock market works. It's just the way it is. So a glitch down to here. And that's not what you would see. If you saw it up here, the day it broke down, then I would be worried. But not at the bottom of a potential overextended move below the 200-day moving average. Then I would be worried if it happened at the top, but it didn't. It happened at the bottom. So eventually it'll get there. It needs one more wave higher before it can roll over and start the annihilation. So there's just a lot of things that we see. And all in all, we're bullish. Buy stuff, hold stuff, don't freak out. It's not the Great Depression yet. We still got a little bit more. We have another bout of euphoria before this can roll over. All right. So stay nimble out there and stay bullish. Stay bullish unless it breaks 434.78, which it should not. Alrighty. Alrighty. Adios.